All right, ladies and gentlemen, welcome to today. My name is Julius. Today it is not like any other days. We are blessed today that for the very, very first time we are having an expert in setting up our robots to share with us amazing nuggets for maximizing of profit. I want to welcome different leaders on the call. I want to welcome everybody who is a V1. Being a V1 is one of the precious ranks in Royal Queue because it means you have fully activated your robot and you are learning how to use it better to maximize profit. I want to recognize the presence of all V2s in the house. If you are V2, congratulations, because now you are a team leader. You have 20 people in your team that you are working with, that you are ready to help to prosper. You are ready to help the 20 people under you to use their robot efficiently so that whenever they trade, you earn. Perfect. At the same time, I want to welcome the presence of V3. A V3 is an icon in Royal Queue. Why an icon? Is not only a V3. Here I love calling V3s icons because he has 3 V2 leaders he's working with. And these 3 V2s are basically here to help the 2020 to win. So as a V3, you are working close with 100 people in your team to make sure that they are winning to maximize profit. I want to welcome the presence of V4s in the house because as a V4, you now have over 3 V3 leaders in your team. And your goal is to help each leader to keep winning with his team. Ladies and gentlemen, I want to welcome the presence of V5s in the house that have taken up leadership steps to lead their audiences and their teams to maximization of profit. But today, it's not talking about ranks. Today is basically talking about how basically and purely we could be able to maximize profit by setting our robot in a better way. Who do you know in your team that is not on the link today? The best strategy is for you to get the link, inbox them in chat so that they can get in. Ladies and gentlemen, I want to pass a reminder. If you are in Kampala, tomorrow at exactly midday, we shall be starting a business presentation and a recognition rally to recognize the V2s, the V3s, the V4s that will be on our event tomorrow. Are you in Kampala? Who do you know that is in Kampala and is interested in learning about blockchain, cryptocurrency, in learning about the next Bitcoin halving? What's going to happen? Why is this year called an accumulation year? Why accumulate? What's going to happen? Why are banks closing? Why is fiat losing money? How can they position themselves for the future? Like Jeff Bezos said, you want to go where the world is, you better position yourself so that when things change, you are in the right position. With pleasure, ladies and gentlemen, allow me usher in our guest speaker today. He is a robotic expert. He is a coach in the network marketing industry for several years. He is an social media expert in teaching people how to maximize use of social media. If you're interested to learn about Instagram, Facebook, Twitter, this guy, this leader I'm going to invite, this gentleman, has expertise in social media marketing, social media designing, all critiques of social media in making sure that you can maximize profit using social media. He is a leader of a big team. He is a mentor, a coach to many. Ladies and gentlemen, join me as we welcome a super champion. Ladies and gentlemen, he is the founder, ladies and gentlemen, and the coach of the Royal Q Academy, all the way from India. Join me as we welcome none other than Coach Manish from India.
Thank you so much, Leader Julius, for such a warm welcome. I always feel excited when you invite me. And welcome all leaders who are here to learn about our wonderful Royal Q robot and how to apply the perfect and the most efficient robotic settings so that we can trade and we can earn better. So just let me. Okay, so today's topic, as Leader Julius told you, is about we are going to learn how to set the robot and how to give it a best setting so that it can trade for us quite efficiently, right? So we need to learn these skills because to Royal Q is a high speed car. You can compare it with a high speed car. You have just bought a very efficient, very cool car which you can use to travel to your destination. So this is your vehicle towards success. But as a driver, as you are the driver of the car, you need to learn how to use this car in the most efficient manner so that you won't be left behind, and you need to give it the best settings, best uh, parameters so that it can help you reach your destination very soon. Okay, so this is why we learn every day. And allow me to share my screen now and let us travel to Royal Q. Let us travel to Royal Q. My voice bit low today because I have a severe cold, but still, uh, I think we can manage. Okay. So today's topic, as we all know, is to learn about settings. So for the all the newcomers who join your team, or maybe you are yourself a newcomer, you need to learn how to open a trade and give the best settings to robot, because Royal Q is your servant, is your employee. It will work for you as exactly as you give it the orders. It will not go beyond the orders, it will not go less than your orders, but you need to learn how to give the best settings so that you can make the best of the best from. So when we need to start it, and I will focus particularly today on how to set up the one shot or signal trade, and later in our future sessions we may discuss about the cycle trade also. So today's topic will be focused on how to set up a signal once you receive a signal, and how to give the best settings for the Royal Queue, and how to start the trade. And so in the end, I will also share some few learnings how you can manage your capital, and if the market price of that coin, whichever you are trading in, it goes below your the last call. So how do you manage to come out the floating loss, and you can manage to earn even while you are in floating loss. So these are the few topics for today, and I hope you are ready to learn now. So whenever we receive a signal, or maybe you don't go for signals, you want to open a trade on your favorite coin, the coin which you love. So maybe you choose a coin from these multiple coins. So first of all, we will focus today on USDT market, like on BTC market in our BTC accumulation session every Wednesday. Today we will focus on USDT market because it is the most aggressive market, and we can take big profits from this even while we trade for a short period of time, for maybe one day or a few hours or a few days. We can get in the trade anytime, and we can get out of the trade with our profits. So like you see here, this is the home page of Royal Q. Let me open my pen. Right. So this is the home page of Royal Q. And as you can see here, these are currencies, all the coins that are mentioned. This is, you can sort the coins according to the last price, either increasing or decreasing order. And you can also sort the coins according to the performance, that is a change in percentage in the last 24 hours, uh, both in increasing order. So if you want to see which coin is performing best, where you need to go, you need to come here and tap on this button. Once the first time you tap, you will see that the top performing coins, they have been arranged to the top. So these are the coins that are performing better, and they are showing, the Royal Q is showing this in the decreasing order. So if you go below, the percentage will keep on dropping, right? So if you need to trade, if you want to trade on the best performing coins, you can sort it from this button, and you can choose your coin also. You can choose your coin also if you tap on this one. But if you tap on it twice, if you tap on it two times like this again, so it will arrange the coins in a decreasing, in an increasing order, right? So the performing coins will be in the top, like you see, GRT is at the bottom in performance, because it is showing that in the last 24 hours it has gone below 2%. And some of the coins are also performing poor, that is why they are showing in the red color. But if you go below, these are the coins that are that have started performing quite better, and in the last we will see the top performing coins. So it is always advisable that open a trade on such coin which has already touched the bottom line, because we all know because we all know that market moves in cycle. It moves like this, it goes up, then comes down, then again goes up, then comes down. Maybe it isn't going in an uptrend, or maybe it is going in a downtrend. It doesn't matter whichever trend it is following, but still, if it is in an uptrend, it will not go like this straight. It will go like this and this and this. And same way, if it is going in a downtrend, it will follow this same pattern up and down. So no matter the market sideways or it is an uptrend, you see, this is an uptrend, this is a downtrend, or this is a side trend. In whichever trend the market is, we can always make profit, because the price of any coin keeps on changing every minute. Every minute it is going up or down. So if we are a smart trader and we give the best settings to the robots, we can help the robot to take profit even in the downtrend or in the sideways or in the uptrend market, because every time the drops this at this level, we need to buy, or when it reaches this highest level in the trend, we we will we will sell at this point, right? And same we can do in the downtrend also. If we are in a downtrend, there is no need to worry. If even if the market price is going down, still you can buy every time the market touches the minimum level, and every time the price touches the highest level. So this is the perfect opportunity to buy, and this is the perfect opportunity to sell. And in between this and this, what lies is your profit. This is your profit, which you cannot do manually. Maybe it is very hard for doing manually. We need some robotic settings to do this automatically, right? So we have a wonderful robot. And as I told you, if you want to choose any coin, it is best, it is most advisable that you choose a coin that is at the bottom, maybe out of all these red coins, or the coins that are started to pump up, that are starting to go up, like these coins in the starting of this trend, right? These are the coins which have started to go up. You can just go and first study the chart, which is where the price of any coin is in the current position. Is it in the bottom side of the market, or is it in the upside of the market, that we call, is it in the oversold area, or is it in what area? So for that, you need to learn trade settings and the technical analysis, but that is not the topic for today. So suppose you choose any coin and you want to open a trade. I will just pick from here. Suppose we take first coin or the second coin, atom. Okay, so let us go for atom. And what you need to do for robotic settings, for applying robotic settings, what you need to do, just give me 1 second. I will turn off my notifications and then we will continue. Okay. So we are about to start how to apply, how to use the robotic settings, and let us go to our royal queue again. So as we have opened that coin, and what we need to do, you can make notes if you don't know how to set up a trade. The first thing you did, that you came to the coin, and this is the coin. This is the page which is showing you that this is the name of the coin. It is in USDT market and the coin name is Atom. We are into the market tab, and this is the current price. This is the current price of this coin, and this will show in your own local currency, like it is showing in INR because I'm in India. And this is the change which is showing how much it is in plus or minus in the last 24 hours, right? And these are some additional informations that giving us that what was the highest price in the last 24 hours and what was the lowest price in the last 24 hours. And this is the volume, the highest and the lowest volume. And this is a chart which has opened in 1 hour time frame. You can go for 4 hours or 1 day or 1 week, or you can choose from here whatever time zone you want to study, right? And this is the chart, actual chart, which is showing you that this is the price movement of this is the price movement. This is a chart, and you can study from here also, or you can go to your trading view app for this. And one wonderful thing that royal q gives us is these parameters, which are the volume, see, look, if you observe carefully, whenever the market sees a green volume, that is showing us that this is the buying pressure. So this is going to impact the price point, right? So if you connect it to the chart, you see that we saw the price to jump up so high that it could give you a lot of profit from here, right? And we see a lot of indicators here. Some of our indicators are here, like you see here. These are the moving average indicators that you can also study if you have some knowledge, right? So when you want to open a trade, first thing you do is you go below and tap on this create button. Tap on this create button. Now the robot is asking you which bot strategy bot you want to open. So we have two different bots here. One is the martingale strategy bot and second one is grid bot. There is a lot of difference between these two, and you can learn how to use a martingale strategy and how to use a grid bot. But in brief, in brief, if I tell you one good reason why we should open a margin called martingale strategy bot, because it is semi-automatic. Means that you are in full control anytime. You can change the robotic settings if you want. You can change it. But if you are using a grid bot, that means you are giving it a predefined settings. So that will move in a certain range, and you are not given so much control after you open a trade. So for for the people who are trading on signals, and they are using a preset price and one shot strategy, this is the best which I will advise. Open a market bot, because it allows you to drive the car better, right? So you will select this martingale strategy bot and again tap on create. So it will take you to the next. So this third page, as it is asking you, do you have a own strategy, or do you want uh, help from some other strategy owner, strategy, copy strategy owner? So these are the two or choices that you can make. Either you can choose a circle owner strategy to sync with your strategy. So that will make your trade an automatic trade, because you lose your control and you are just copying the strategy of a circle owner. So if you want to use a circle owners, you can click this one, this next button. But if you have knowledge and if you want to apply your own strategy, so you can feel create your own strategy that will give you more flexibility if you choose this one. So it is better that we choose the next one, the second button, which is in the bottom of the page, because we all are learning how to use the robot and we all know how to give the settings. So we don't need to depend on any circle owner or some other person. You just need to open the trade from here. This is the correct place where you should go. So tap on the bottom next, and then you are into the trade setting page. So this is showing us all the features that you need to learn first. And when you have a clear idea what all these features are uh, about, and what you need to do to study and apply the settings, then you will be in a better place to use this robot better, right? So this is the first page, but you need to understand each and every meaning of these figures, these buttons, that what are they showing you, right? So I will start from above, then we will go to this trade settings. So I will start from above. This is the name of the coin. You can also tap on this button that is showing the candles chart, right? So you can again open from here chart if you want. This is showing us the position amount of what how much USDT you have invested in this coin, right? How much USDT you have invested in this coin. This is showing you the position quantity. That means how much quantity you have bought from this position amount. This is showing you the money that is invested in form of USDT, and this is showing you the quantity of the asset that you have inside your exchanger, right? So these are your two two parameters that are showing you the total quantity and the total money invested in this coin. I hope you understand. When we come to the middle part, here we see two different prices, because I haven't opened the trade yet. So this is showing, these figures are showing zero, but when you open the trade, this will show some quantity, right? So what is this average price showing, and what is the current price? As we all know, current price is the price that the coin is trading in market right now. That is the current price, but we are given another price that is called an average price, and it can be little higher or little lower than the current price. It can be different. Why? How it is calculated? Calculated by how much quantity you have purchased and how much money you have invested. If you divide these two, if you divide these two, if you divide these two, you will get the average price of the coin that you are trading in, right? I hope this is clear. So suppose you have invested $100, for example, you have invested 100 USDT, and you have bought 50 coins. You have bought 50 coins of any coin of any crypto. So the average price will be the the quantity, the quantity, the total quantity, position quantity divided by the position amount. So that will be how much? That will be 2 2 USDT per. That will give you 2 USDT per coin, right? So that is how, if you divide these two, you will get an average. But this is showing the current price that is in the market right now. So if the average price, if this average price, it is lower than your current price. Suppose average price is $2 and the current price is suppose showing us $3 per atom coin. So that means you are in profit. That means you are into profit, and this will show the percentage of profit here, the return rate. That will show you that you purchase quantity, the total asset in this average price, right? So average price comes lower and the current price is showing us that it is higher than the average price. That means sorry, I uh, I gave it opposite. So that means your average price is lower than the current price. So that means you are in profit, because the price that purchase the asset, it is less than what the market can give you right now. So this is the current price and this is the average price. So that means that this should be in plus. What is this? This is the return rate. The return rate that shows you either you are in floating profit, or you can be in floating loss also, right? It can be floating loss or floating profit. So if it is in minus, that is it is in floating loss, or if it is in plus, that is showing us floating profit, right? I hope you understand this. So this is showing you the return rate. Either it will be in minus or it will be in plus. That depends whether your average price is less than the current price or is it above the current price. Suppose the average price is $5 per Bitcoin, sorry, 5 USDT, 5 USDT or $5 per quantity of one coin, and price which you see in the market, it is showing us that we can get at only $3 per Bitcoin, per this coin, atom coin. So that means that we are into a floating loss, because the price at which we purchased is higher than what we are getting at the current moment, right? So if you go and sell today, you will be minus $2, right? So that is showing here. That is showing you. And what is this number of call margins? That how many times that the robot has purchased for you. How many times the robot has purchased for you. That we will be learning in the trade settings, right? When we go the trade settings. So these are the meanings of all these parameters, and I hope you have a clear idea now. So whenever you see any coin that you are in trading and you come to this page, you should understand what is the exact meaning of all these figures, right? So below this, if you see here, we have 5 buttons here. One short button, then sell, then buy, then stop margin strategy mode. So we all have different functions of every button. You can either trade on one shot or you can either trade on cycle. If you click on this button once, after you have started, it will not click now because I haven't started right now. If you have clicked on this button, you can change it to cycle mode also. And when you click on the cycle, it will go to the one shot, one shot trade, right? So I hope you understand what is difference between cycle trade and one shot trade. Cycle means that every time the robot buys and sells, it will keep on trading in this cycle. In this cycle, whenever it sells all the coins that you have purchased and sells all the coins that you purchased before, it will again open the trade and buy at the current price. So this will keep on moving in cycle. But if you don't want the robot to buy again, what you can do, you can trade on one shot. That will tell the robot that once you have sold all the coins, once you have sold all the coins here, you should not go again and buy the coin for me. So I will close the trade from here, right? So this is how you change the one shot and cycle button. Okay. And these buttons are for manual replenishment that I will not advise any one of you to use unless you have some emergency. So that is something that you are stopping the robot and you are interfering the functioning of the margin calls and you want to sell or buy manually, right? You're not using the robot to buy or sell. What is this stop margin call? You can use this button if any time in the trade, any time if your trade is running and you want to stop the robot to buy more, but it will not stop the robot to sell, because every time it sees a profit in the market, it is going to sell and it will give you profit, right? But if you want that, the suppose you see the market price are dropping and you don't want to keep the robot should keep on buying and buying more and more, you can click on this button and stop the margin calls, so that the margin calls that you have given the robot in the trade settings, it will stop buying more every time it reaches the trigger price, right? So anytime you can stop or anytime you can open it also, right? And what is this strategy mode? This is very important. This is very important. If I click on this, uh, it is not clicking right now. So maybe I need to open some other trade and let us go to some other trade which I have already traded. So let us go to some other trade and see if we can use this button, right? Suppose this is the coin which I'm trading, and you see here, what you see here is all the figures are now filled up. This is the position quantity. This is the position quantity. This is the position amount. This is the average price, and this is the current price. So if you see the average price is higher than the current price, it should give a minus return rate here. So that is showing the floating loss. And the number of margin calls the robot has purchased is 1. That means it has just opened 1 margin call, right? And this is showing in cycle. If I click on this, it will change the strategy mode to cycle mode, right? And what I was talking about to explain was this strategy mode. So if I click here, you see there are 3 different strategy modes. So first we will understand this, then we will go to the trade setting part. That is the most important part in today's lesson. So robot gives us 3 different kinds of strategy. That is a very smart robot, and it allows us to use either of these 3 strategies. And you need to understand what is the difference between these. First, as you see, is a whole warehouse mode. Second mode you can use here is the sub-bin mode. And the third mode that you can use is sub-bin mode in real-time settlement. So what exactly is difference between these three? The first one that is showing us whole warehouse mode. That means, as the name says, you are telling the robot, you are asking the robot that whatever you are buying, just keep it storing inside my warehouse. I am giving you a warehouse. Just buy and keep it there. Buy and keep it there. You are stocking up your coins. You're not selling them. So when will the robot sell? The robot will sell all the coins, no matter how many times you have purchased, no matter how many coins you have purchased. It will sell all the quantity in one shot, not in one shot, in one single selling trade. So that is giving you an option that you can stock more and more coins, and you just need to keep on buying and buying. And when the current price reaches above the average price, then you are asking the robot to sell, and it will not sell one call or two call. It will sell the whole warehouse that you have built for you. So this is for long-term trading, and for the people who believe that we need to hodl for a long time because we don't want to sell frequently. So they are trading for maybe a longer period of time. And also this is also used in the first 4 margin calls, 1, 2, 3, and 4. So as you see, if you know about trading in the trade settings, you see that every time the robot buys one more time, it has opened one more margin call. So suppose it has bought 3 or 4 margin calls. So these first 4 margin calls will be considered as a whole warehouse. That robot tells us that the first 4 margin calls will be in whole warehouse. That means you cannot sell each call separately. You cannot sell each call separately. You can only sell all the first 4 margin calls plus the zero call, that is called the first buy. Actually, you have bought 5 times 4 margin calls plus the first buy. So it will sell only after the total quantity and the total average price is below the current price, and the current price is higher than the average price, so it will be in profit. So what it will do, it will calculate the average price of all the total quantity. You know the formula, quantity divided by the total amount. The total quantity divided by the total amount. I will write it here. The total quantity that you have purchased in either 1 call, 2 call, 3 call, or 4 call, the total quantity that you have purchased divided by the total amount you have invested. So that is giving you the average price, right? This is the formula. So when the current price is above the average price, and which is the trigger price that you have set at the trigger price of the take profit ratio, then the robot will sell all these margin calls, zero call, 1 call, second call, third call, and fourth call. So this will calculate all the average price. So how you can manage these 4 margin calls? If you purchase the same quantity every time, suppose you purchase one time here, sorry. If I tell you this, 1, 2, 3, 4. So this is the whole warehouse that will be sold in one time, right? Suppose you have purchased one time here, you have purchased one time in each call. So what this will do, how this will affect the trading? It will allow the robot to have the average price in exactly the middle middle of the these 4 or 5 margin calls. So the average price will not be below or above, it will be in the middle. Every time you are buying one time, it will be in the middle, or you can say the average price will be at the same price that you have purchased in the first buy. It will be around the same, near the same price that you have started when you have purchased the first buy. So our purpose in this settings, what we need to learn is to bring the average price closer to the current price. If we are able to bring the average price closer to the current price, and if there is little difference, suppose it is 0.5% minus in minus, or so that will allow the robot to quickly sell once the current price reaches above your average price and it crosses the take profit percentage. Our purpose in this trade setting should be not to buy the same quantity every time, because we'll know that it cannot sell any individual call separately. It can only sell whole warehouse. Even if you have set the strategy to sub-bin mode, or even if you have set the strategy to the sub-bin real-time settlement, it doesn't matter, because in the first 4 margin calls, it will always choose the whole warehouse mode, right? So our purpose should be to buy more every time the market drops. So suppose you have bought one time here in the first buy, our focus should be buy more, at least something more than what we bought before, right? So if we buy more when the price drops, because it will only buy the margin call if the price drops. Suppose you have set 1%. If the market price drops by 1%, go and buy 2 times. If the market drops again 1%, go and buy 3 times or maybe 4 times. You can choose whichever, how much quantity that you want to buy. But the best way is to increase the quantity you are buying every time you are buying at a lower price. So what it will do, it will help you to increase it will help you to decrease the floating profit, the floating loss. The floating loss will be decreased and your average price will come closer and down. The average price will come down near to the current price, right? So if we are buying the same quantity, suppose the average price is here, if we have bought one time each, but if we buy more in the next margin calls, if we buy more, the average price will go below here. Maybe it will come here. From here, it will come here. So if the robot sees that the average price is very close to the current price and the current price crosses above the average price, it will get ready to sell and give you profit. So that is how you are giving the best strategy. So if you are trading on one shot or you're trading on signals, most of us, what we do, we trade either on one call or we trade up to 4 calls. 1 call or 4 call. That depends. But no matter if you are trading on 1 call or 2 calls or 4 calls, the strategy mode will be always in whole warehouse mode. So you need to understand this fact that robot will not sell any call separately. If you are giving less than 5 margin calls, it will only sell the whole warehouse in one go, right? When the average price is below the current price, right? So if you want to open more margin calls, suppose after 4, you open 5th margin call or 6th margin call or 7th margin call, according to your capital, then you can choose from these two options. These two options. Either you can choose sub-bin mode or you can choose sub-bin mode real-time settlement. But that will be allowed only if the margin calls are more than 4 margin calls. If the robot buys 5th margin call, then it will open this feature of sub-bin mode, right? So in sub-bin mode, there are two different ways that you can allow the robot to trade for you, right? So these two are only opened when the margin call is above 4 margin calls. You need to understand this. Below, if the robot has not purchased the 5th margin call, it will still be in the whole warehouse mode. It will still be in the whole warehouse mode. So once it has crossed the 4 margin calls and opened the 5th or 6th or again another margin call, then you can choose either you can trade on sub-bin mode or you can trade on sub-bin mode real-time settlement. So what is the difference between the two? It is very simple. First of all, these two different strategies, they are allowing you to come out of whole warehouse. They are allowing you to come out of whole warehouse, and now they are giving you a freedom that you can choose to sell any particular single margin call separately. So once it has crossed the 4th margin call, suppose it has opened 5th margin call, then it has purchased 6th, 7th, 8th, 9th, and 10th. Suppose you have opened 10 margin calls and you have already crossed the first 4. That is the whole warehouse mode. So now you have this freedom that the robot will sell each and every call separately. So the average price of each call will be different from other one. But in the whole warehouse mode, the average price is just one price, right? For all the 4 margin calls. I hope you understand this difference. The average price whole warehouse mode is a single average price. That is the average price of all the 4 margin calls plus the first buy. But when we enter into sub-bin mode, that is below 4th margin call, then the average price of each individual margin call will be separate. That means average price for 5th margin call will be different from the average price of 6th margin call or 7th margin call or so on, right? So what the robot will do, it will sell each call individually. It will not consider what it has bought before and how much is the average price, what was in the previous call. So it will just calculate the lowest, the latest margin call. Suppose it has bought 10 times. So it will just consider the average price here for this 10th margin call, and the current price goes above the average price, it will sell this one. It will sell and it will sell in the profit. Right? So you will keep on earning profits even if you are in floating loss in the first 4 margin calls. Even if you are seeing a floating loss in the whole warehouse mode, even if you are into floating loss, still you have this freedom that you can earn a profit from each and every margin call. So this is a big secret, that even if some traders see that we are into floating loss, maybe you have 20% or 30% floating loss, still you can open more margin calls, maybe 5 or 10 more margin calls, or the robot allows you can open a maximum of 999 margin calls. You are allowed to open to a maximum of 999 margin calls. So if you have capital, you can open more margin calls, and still if you are in floating loss, you have this freedom that you can still be earning profits, trade profits from the lower margin calls, right? Just give me a second. I will come back. So if you are following till here and you have a clear understanding, just give me a thumbs up in the chat option, or you can write it is called clear. Just give me a thumbs up if you have clear understanding what we are talking about till here, right? Do we have a clear understanding till here? Do you see that? Do you understand the difference between being in the sub-bin mode and the being in the whole warehouse mode? This should be clear. Okay, right. This should be very clear, because unless this is clear, you cannot understand what is the importance of opening more margin calls. You will just be trading in as you set the trade settings in the initial stage, right? So this allows you, this is a wonderful thing that it allows you to earn profit even if you are in floating loss. Even if you have 20, 30, 50% floating loss, still you can earn. So most of the traders, they complain that I'm not getting any profit, I'm in floating loss, my coin is gone down, and I don't have any profit from the last many weeks. Still you have this opportunity that you can open more margin calls in the sub-bin mode, and you can make profit even if your total asset is floating loss. So what is the difference between these two, sub-bin mode and sub-bin mode real time? There's a little difference. What you are asking the robot to do, right? So every time it buys and sells the margin calls that are in sub-bin mode, that is after the fourth margin calls, it is giving you two options. Either of them you are earning profit. So whenever the robot will sell, it will give you profit. But if you are into sub-bin mode, what you are asking the robot to do, to use profit for averaging, for bringing the average price lower and near to the current price. So you are asking the robot, I don't want to withdraw my profit, just keep selling and buying and giving me profit, but use the profit and add it up into my invested capital. Just add the profit and compound it inside my capital and use it for average. So that way you are using your profit for bringing the average price closer to the current price. So this is the use of sub-bin mode. But if I choose the sub-bin mode, sub-bin real-time settlement, I hope you can see the color, or I should have changed the color. If you are using sub-bin real-time settlement, so that means you are asking the robot that give me my profit, I needed to withdraw. So it will show the profit inside your revenue details. So this is the difference between the two. This is to allow the robot to use your profit, and this is asking the robot to give you your profit. Don't use, give me my profit, right? So the profit, if I choose this one, the third one, the profit will go into the revenue, and it will not be used again in this trade. It will be my earnings. So I can go and withdraw from my exchanger. It will not be used in the trade. I am free to withdraw. So if you want to withdraw your profit, you can use this feature, the third one. sub-bin mode real-time settlement. But if you want to come out of floating loss, suppose you have a long trade and you want to come out of this floating, you can use this sub-bin mode and use your profit to bring your floating loss little less, little lower, and bring your average price closer to the current price. That is called dollar cost averaging, right? So these are the two options. And what is the benefit if you use another benefit? I must tell you, if you use this one, the first benefit is, I told you, the first benefit is it will use the profit for averaging. Another benefit, because you are not withdrawing your profit and you're not taking your profit in your account, it will also not deduct any fuel charges, any fuel fees. So the robot will keep on selling and showing your profit in your transaction record, but it will not deduct any fuel fees. So you will save your 20% also. You will save your fuel charges, the 20% fuel gas fees, right? In this way, you are taking two more benefits, right? If you are using this sub-bin mode strategy, right? But if you choose this one, what you are doing, you are taking your profit, you are asking to give my profit, and it will show in your revenue, and also you will pay the gas fees, the fuel fees, the 20% gas fees. Okay, so this is the difference, the two differences. So if you want not to withdraw and use it in the trade to compound your asset also, and or to bring the average price lower, you can choose this one and tick it here. But if you want to withdraw the profit and use it for your own, you can choose this one, right? But this will open only you can change these three, but you can change only when the trading is in the whole warehouse mode. You can, if it enters into the sub-bin mode, what does that mean? This is very important, because a lot of people ask this question, that I am not able to change my strategy mode. What is not allowing me to change? It is showing me whole warehouse mode, but I cannot change it to sub-bin mode or real-time settlement. Why it is not allowing you? Because it only allows you to change the strategy once you are into whole warehouse mode. Means you are from into one call, first call till your fourth call. Suppose it buys the fifth call and you have not changed your whole warehouse mode to sub-bin mode or real-time settlement, it will not allow you after the robot purchases the fifth call. It will not allow. So you need to wait then. What you need to do, you need to wait to this to close, and it will sell the fifth margin call. Then again, it will enter into the whole warehouse mode. Then you can click on these buttons and you can select. And so since you can see I am trading in whole warehouse mode and my robot has only purchased one margin call. So anytime I can change this. But if I had purchased, suppose 5 margin call or 7 margin call, then it will not allow me to change it, right? So this is the difference and important things that you need to remember. Below this, now coming below, this is a very important feature in this trade setting, that is allowing you to preset your price and use a certain price as a preset price that you are asking the robot to purchase only when the current price hits this preset price. So suppose this current price is, as you see, 4030, right? And you set a price below this price. The first thing you need to understand, it should be below. if you give a preset price that is above this, so it will compare, is the preset price, is the current price less than above the preset price, or the current price is below the current price, right? So if it is below, it will go and buy at the current price, because it will only buy at a lower price, not at a higher price, because the robot is our friend. It doesn't wants to give us any loss, so it will always be our friend, and it will always buy at the lower price, not at the higher price. So suppose you by mistake you put a price that is higher. Suppose the current price is 4026, and I put a preset price 4050 here, 4050. So it will go and calculate which is the lowest one. Is this the lower, or is this the lower? So it will buy only at the lower price. Got it? So if you want the robot to buy when the price is lower than this, so you need to put a price here which is lower than the current price. So suppose if I put a price here 4010, so what it will do, it will compare these two, which is the lower, and this is the lower. This is higher, this is lower. So it will always purchase at a lower price, not at the higher price. So this feature allows us to predetermine our price at which we want to trade, which we want to start the trade. So for this, you need to click here on this arrow, and I cannot click right now because this is already started the trade. You can only use this feature before you start the trade, not after you have started the trade. So suppose I go to some other coin and I choose a different coin on which I am not started the trade. Suppose I come back to Atom, then Martingale, then create, then next, and then I want to start this trade, and I look up that the current price is 11.51, and I put a preset price here. How? I don't know why it is not opening. Okay, I need to start the trade setting. Okay, I just put this and save, and then now this is opening, right? So you need to put a before you want to use this feature, go to trade setting and save any setting that you want. I will teach you how to set up the trade, but first you need to go here and save the settings like I just did, right? So after I have saved the settings, I can go and set the preset price from here. So this is very important feature, and this is additional feature that allows you to determine a price that you want to start the trade. So suppose the current price, as you see, is 11.50 something, right? So suppose I put a price that is much lower here. I put that I want to start the trade only when the current price reaches to $10. So if I confirm here, you see here the price has been feeded. Here the price had been feeded. And what the robot will do, it will go and check these two prices. Which is the lower? Which is lower? If this is lower, it will start at this price. If this is lower, it will start at this price. Because he is our friend. He don't want to make any loss for us, right? He's a very good friend. So he will only start at the lower price to give us a better opportunity. So to start, you need to come here and press the start button. Only then it will start, right? So I will not start here because I don't want to open the trade. Now you see, this is the beautiful function, and you can also use it in a different way because it is giving us two options. Either you can choose a price or you can choose a drop rate also. So suppose you don't want to put any price here, what you can do? you can choose the drop rate, and it allows you to put a percentage here. That from the current price, what percentage should it drop so that the robot will start the trade and purchase the first buy for you. So suppose I put a drop rate of 5% here. So it will wait till the price drops to 5%. So suppose I go here and type a 5%. So it will also show me that if you choose a 5% drop, this should be your current price. This is the price that you are putting to preset, right? This is your preset price. I can change this price also if I go to this price option, or I can choose this drop rate. So suppose I do this. I'm not happy with 10.95%. I can choose to make it a bigger. So I can go and tell it that only purchase when the price drops to 10%. Then the current price, then the preset price is changing, right? You can also increase it to any time, any much percentage that you want. Suppose I put a 20%, so it will wait till the current price reaches to this preset price. And if I confirm here, you can see here, this is the preset price that I mentioned. So I have given it an order to wait till the price, this current price drops by 20%. And when it will drop, it will reach at this price. So this is your preset price. It will keep on waiting till this price is reached, and then it will start the trade. So this is very important. So if you want to erase this price, just open it once and clear and click on confirm. Because you have not entered anything, it will confirm to blank. Now coming to the trade settings, that is the most important part that you want to learn. If I go to this trade settings, I can set all these parameters that are showing here. You see these parameters? These are the same parameters that we will set in this trade setting. So you will go to this trade setting, and now we are giving the trade settings that we want the robot should work accordingly, and it should trade on these parameters only, right? So you need to understand each and everything that is mentioned here, because each thing is very important. Each thing is very important because this is where you define your trade. This is where you define how your trading will go on. Just think about it like you are hiring a crypto trading expert and you are giving it a clear instructions that if this happens, do this, if this happens, do this, if this happens, do this. So it will note it down, everything which you have told, and it will only obey your orders because you are his boss. You are his boss and he will obey you. So if you want the robot to work perfectly and in the most profitable way, you need to learn how to set up these settings in the best way, and which is the best setting for you. You need to learn all these features, right? So there are several features here, and each feature has its own value and importance. To start from above, this is your first buy in amount, which is mentioned here. Suppose this is mentioned 12 USDT, you can change it to any figure. But if you want to change, first thing you need to do is to click on this pencil. That will open the edit button. Right? So I click on pencil, and now the parameters are into editable mode. So first thing I need to do here is to change it to 15, because in the default settings, it is always showing 15. If you open a new coin, it will only show 15. So as the recent updates of RoyalQ is advising us to not go below this $15 first buy in amount, because this is the least, the minimum first buy we should use, right? You can go below also, but it is not advisable. Because why it is not advisable? Because sometimes you see that the quantity of the and the price keep on changing in the exchange. So suppose it has deducted any charge from your USDT in form of the maker taker charges in the Binance or your exchange. So suppose this has deducted, if you have $15 and it has deducted 0.2 USDT for any fees, for multiple fees. So this will show a a less balance in your exchange. Suppose it will show 14.80, and this will mismatch the first buy in amount, right? So you don't need the robot to take to give you abnormal operation and not open the trade. So that to avoid any errors, any calculation errors, you need to put a minimum first buy at $15, right? So this is the first buy that you should use. You can increase it according to your capital also. You can increase this, but don't go below $15. But how much can you increase? That depends on your capital and how much you are using into this page, the margin configuration page. So that I will come later. So first thing you need to understand, what is the importance of all these parameters. So this is the first buy in amount. What is the first buy? First buy is the amount which it buys at the first time when it starts the trade. So suppose you have started the trade in the previous page. This is the first amount it will use for buying you a single call in the trade, right? So this will use $15 to buy, to go and buy the coin for you, and then you can start the trade, right? So coming down, and this is another but option that you can use if you want to double this first buy. If you want to double, why would you want to double? Suppose you are trading on a new coin, you want to start a trade, and you can see that the coin is going straight up. It is going straight above in an uptrend, and it is very favorable market. So what you can do in that condition, you can open this double up button like this, and when it starts the trade, it will not buy with $15, it will buy with 30 USDT, right? So the first buy will be doubled, but it will not affect the margin calls here. In margin calls, it will only be in multiple of this for $15 only, right? So this is just for doubling your starting amount of your trade. So we recommend that you should always not use it unless you are clear what you are doing and the market is going straight up. You want to open more with a bigger amount, right? So this is another option. Below this, you see margin call limit. Why we need to put any number here? Because we want the robot to buy every time the market drops. It will buy some quantity, then again the market drops, it will buy more. Again the market drops, it will buy some more calls. So these are the calls, 1, 2, 3. These are the calls that you are asking the robot to buy. So if you put a 7 here, what does this means? Once the robot has bought the first buy of this $15, it will buy 7 more times. 1, 2, 3, 4, and so on. The total it will buy 7 times. So you can design your strategy according to how much capital you want to invest, and every time it will buy. Every time the market drops, it will buy, and you are asking the robot to buy a maximum of 7 margin calls. You can reduce it also, or you can increase it also. So if someone wants to trade in on any signal that we provide, and you want to open a trade on any signal, what is advisable that you use a maximum of 4 or 5 margin calls here. Why I'm saying 4 or 5? Because we all know, as I just discussed before, the first margin calls, the first 4 margin calls are into the whole warehouse mode, right? And if it buys a 5th margin call, this will not be in the whole warehouse. This will be treated separately, that we just discussed, right? So if we want to trade on a signal, either you can open 1 margin call, or you can open 2 margin calls, or 3, or maximum of 5 or 4, right? So this is advisable that you open at least 4 margin calls, because every time you start a trade on a signal, most of the time it is not going. Suppose you start here, most of the time it doesn't go straight up to 3%. What it does usually, it drops a little, then goes up to 3%. So to cover this drop, we need to open some margin calls, and it is up to you how many times you want to buy using this margin call drop, right? So if you use 4 margin calls, that means you are covering the drop in the market that you expect, the margin call drop, and you're also buying more every time the market drops. So your average price is closer to the current price, and your floating loss or floating profit is minimum. The floating loss is minimum. That will allow the robot to sell faster, right? So this is how you can use this margin call limit. And if you want to trade on a signal, it is best advised that you use 4 margin calls. You can open 4, and accordingly you can choose to use your capital in these 4 margin calls. And later, if you want to open more margin calls, suppose if in a situation that you started the trade in the first buy, then it buys 4 times. It buys 4 times. It has bought all the 4 margin calls, 1, 2, 3, 4, and still the price is going down. What you can do, you can come here and increase this number and open more margin below, open more margin calls below, maybe 2 or 3 or 5, so that you can allow the robot to buy more when the price is dropping below. That will give you another opportunity to lower down your average price, and this is called dollar cost averaging, right? So I hope you understood this part. Now coming to the whole position take profit ratio. Whole position take profit ratio. So what you see here is how much profit do you want to. In every signal, we have given a take profit, right? So this is where you set the take profit and how much take profit do you want to use. So if you see below, one thing I can do to explain you, suppose I write 5 here. Suppose I write 5 here. Can you see here? We see another feature that has opened, sub position take profit callback. This is only opened after you enter into sub-bin mode. Means you are trading on more than 4 margin calls. Suppose I put a 4 here, this will vanish, right? This is disappeared. And it will only show when I trade on more than 4 margin calls. Why? Because I am asking the robot to go below whole warehouse mode and enter into sub-bin mode. So if you are trading in more than 4 margin calls, you can see here that this is the whole position take profit and this is the sub position take profit. This is exactly the same. But what this is showing, that this is the whole position. That means in whole warehouse mode, from the 0 call to 4th margin call, this is the take profit that you want. This is your take profit. But if it goes below and enters into the sub-bin mode, that is fifth margin call, sixth, seventh, or so on, then for each individual calls, you are asking it to take this profit. So this is same. So let me change it to back to 4, because today we are discussing for only one shot. So here you will see that we have this take profit, and you can check your signal. Whatever take profit we have given, you can put here. Suppose we normally give 3% to 2.5%. So what you can do, you can put a 3% here. That is the usual, most common take profit we give in the signals. Below this, you see here, there is another feature that is called hold position take profit callback. What is this for? The callback. You see, hold position take profit. Before this are the same thing. Hold position take profit, hold position take profit. But this is your ratio, that is your take profit, how much profit you want, and this is the callback that you want. That you want the robot to wait for, right? So what is a callback? You must understand this thing to take the maximum profit from the market. If you use this feature, it allows you to take the maximum profit, even more than what you have mentioned here. Suppose you have mentioned 3% here. You are able to take even more than 3%. Even more than 3%. How it is used and how it is able to take more than what you have mentioned, because if you put it a 0, if you put a 0 here, it is giving a clear instruction to the robot that it will only give you 3% profit. It will only give you 3% profit, not more than that. But if I put as some figure here, like you can see 0.3% here, 0.3%. So how it will trade? Just look at this scene. Suppose this is your first buy. I can put it here. This is your first buy, right? You open the trade, and this is your position quantity, position amount, right? So this is your coin, and you are trading on this coin. And once it goes below, it will open more margin calls, that you have put 4 margin calls here. So it will buy 1 time, then 2 times. Then suppose after it has bought 2 times, the price goes up. So what it will do? It will calculate an average price of all these 3 calls, the first buy and the number 1 and number 2 margin calls, and bring out an average. What is the average price of these 3 margin calls? So if you are buying more every time, the average price will not be in the middle. It will be little below the middle. So actual average price will be here. Suppose this is the average price, and you have put a 3% take profit here. So suppose 3%, it will calculate 3% above this average price. This average price above this average price. So suppose it comes here. This is your 3% take profit, right? I hope you can clearly see. This is your take profit 3%. So if I put a 0 here in the callback option, it will sell on this 3% price. But if I put 0.3% here, what I'm asking the robot to do, that don't sell unless the price which is going up falls down by 0.3%. Let me make it clear again. This is your first buy. This is your first margin call. This is your second margin call. And this is your average price. And this is your 3% price. 3%. And the price goes up and reaches this 3%. It goes up and reaches 3%. Now I'm asking the robot will come here and check what is the callback. The callback has been given 0.3%. That is, if the price drops by 0.3%, suppose this level, it will not sell here. It will sell once the price drops by 0.3%. So this will be the selling price. But why am I asking the robot to sell at a lower price? Why not 3%? Why am I asking the robot to sell at the price that is lower than the take profit? Because I want to take the maximum from the market. How I'm able to do it? Because I know very clearly that the price may not drop after this 3%. Maybe it will go above this 3%, and maybe it can reach 4%, maybe it can reach 5%, or maybe even more. Suppose it reaches 5% on any example, and then it drops to 0.3% at this price, at this position of the market. This is the 0.3% drops. After it has gone up by 5%, it drops by 0.3%. I'm asking the robot to sell at this price, not at this price. So if you draw a line here and a line here, you can clearly see that this is above what we have instructed the robot to sell. So it will give me 5% 0.3. What it will be? It will sell at 4.4 4.4%, around 7%, right? A little less than 4.7%. So it will give me a profit of 4.7% instead of 3%, which I have put here. I hope this is clear. It will give me more profit than what I have asked him to do, because I am using this feature callback. I hope you understand this. Is it clear? If it is clear, you can type a yes, or if you want me to repeat, you can type any question that you want to ask, right? You can write, if it is clear, write clear, and if you have some confusion, you can ask again. Is it clear? Okay. So I hope these points are clear. Let us move forward, and let us now gain some speed and do it faster, because of the time. Okay. Now let us go back and check other features what are available. So have you understood these points, that what is the first buy? This is buy, position double, margin call limit, and take profit callback. So these are clear, I think. Then before I go to the margin configuration, let us understand what is buy in callback, why in callback, and how it is used. So it is same like I'm giving a callback every time it will sell and every time it will buy. So suppose you have opened here, you are asking for the robot to wait for the callback. The callback, don't sell at this take profit, sell when the call, wait for the callback and sell here, right? Same way, when I am buying at a price, a percentage of drop in the market, I'm not asking it to buy when the market drops at this level. Instead, I'm asking wait for a callback and let it drop. Suppose it drops a little more than what I set the figures in the margin configuration, and after that it gives a callback. Callback means that reversal in the market. Suppose it is dropping below, it will go up. That is, if it is going up, it will go down. That is a reversal, right? The same way I'm asking it to don't sell here. No, sorry, don't buy here. Instead, wait for a callback. And suppose this callback happens even below what I have given, the percentage of margin call drop, go and buy at this point. Okay. So this is why we use callback in both in the selling time and also in the buying time. This will help the robot to sell at the highest price, sell high, and buy at the lowest price. Because we want the robot, we know that robot is our friend. It will buy at the lowest price and sell at the highest price. That is why it is giving us this wonderful callback feature, right? Now, how it is, we are asking it to buy every time, that is mentioned in this margin configuration. So need to go here, and here on this page we set up all the 4 margin calls that we have asked it to buy. So here, if you come to this page, what you see here is 2 different parameters we need to set here in margin configuration. First one is the call drop, the market call drop, the price call drop in the market, and how much times we are asking it to buy, how much time it will buy. So as I told before, we need to buy more every time the price drops, because if we buy a bigger quantity every time the market drops by a bigger percentage, we are in the benefit of dollar cost averaging, and we are bringing the average price closer to the current price. Our average price is coming down. That will bring us closer to the take profit percentage, right? So how you can design, first thing you need to understand the basic of this, that every time the market is dropping a certain percentage, we are buying more. So every time it drops, you should buy more what you bought before. Every time it drops, you should buy more than what you bought before. Okay, this is your basic understanding. How much more you want, it depends on your capital. Either you can buy 1 time here, 2 time here, 3 time here, and 4 time here. You are into benefit because you are buying more. Remember, you are buying more. Or what you can do, if you are still little capital, what you can do, you can put 1.5 here, you can put 2 here, you can put 2.5 here, because you have little capital. But if you have a good capital, what should be the best strategy? The best strategy that is available in the market is a double up strategy. As I told in the BTC accumulations session also, this is the best strategy. And I gave, if you remember, if you attended that session, I gave you 3 different strategies. Number 1 is double up, number 2 is Fibonacci, and number 3 is +1. I gave you these 3 strategies that are very good, but this is the best one. This is little less than the best one, and this is even lesser effective than the previous one. So this is the double up strategy. If you go and open any trade, first time you will see this multiple buying ratio. It is giving you the double up strategy as a default option. This is the default settings, because you are buying double of what you bought before. 2 into 2 is 4, 4 into 2 is 8, and double of 8 is 16. So what you need to do is you need to just calculate all these figures, just add up all these figures, and you will get a total. How much is the total? how much is the total? I think it is 30, right? If you can calculate. 6 or 8, 14, 30. Yes, it is 30, right? You can calculate. 2 plus 4 plus 8 plus 16. But before we calculate, we need to add 1 also, because first, before we bought the first call, we already have bought the first buy, which is 1. So actually, we are using a capital to buy 31 times. This is time, not the capital. And how much time it will buy? It will buy 31 times into our first buy. Remember what was our first buy? That was 15 USDT. So when you multiply this with 15 here, you will get the capital that is required here. So what we will do, let us go to the calculator now. Let us go to the calculator and let us see how much capital do we need in order to use the double up strategy. So we calculated that we will buy 31 times, and if we multiply with the first buy, we need $465 to trade in one coin, right? This is just for one coin if we want to use double up strategy, and if you want to use the 4 margin calls. I hope this is clear. So this is the amount of USDT that you must have to open 4 margin calls and use the double up strategy. But this is the best one. If you want to trade in the best way, best efficient, most efficient way, open 4 margin calls, use double up strategy, give the robot 465 USDT, and it will trade for you in a most efficient manner, give you maximum and quicker profit. This will allow the robot to buy and sell very quick. I hope this is clear. But for people who have less than 465, suppose someone says I have less than this, what you can use the second best, that is Fibonacci. What Fibonacci says, that you buy 2 times here, 3 times here, then add up these two and put a 5 here, add up these two and put a 8 here. So this is called Fibonacci. That is little less effective than the double up, but it is also good. If you have less capital, suppose you want to total this, so you have 18 margin calls, 18 times that you are buying. If you total this, 2 plus 3 is 5, 5 plus 5 is 10, and 5 plus 8 is 10 plus 8 is 18. And add again 1, so that brings us to 19 times we are buying. So if you want to calculate how much capital is required for Fibonacci, let us go and buy 19 times into first buy, that is 15. So you need 285 USDT. So if you have around $500, you can trade on one coin and use the double up strategy. But if you have around $300, then you can use the Fibonacci. Suppose someone says I have just below $200, can I trade? Yes, you can use a weaker one, but it is still good. What you do here, you just use the +1 strategy. +1 means every time you are adding 1 more times that you are buying. So it will say 2 plus 3 plus 5. So if you add up these, it will give you a total of 14 plus 1, that is 15. So if you go back to the calculator and calculate how much capital is required, you need to multiply 15 with 15, that is 225. So if you have around $200 or $250, $200 to $250, you can use the +1. If you have around $300, you can use a better one. This is good. This is better. And if you have around 500 USDT, you can choose to use the double up, which is the best one. It is up to you how much capital you have. I mean, and if someone has even less than $225 he wants to trade, you can make it a little more weak, but it is not advisable. It is not advisable. Some people do like this. If they have less than $200, suppose they have 120 or $150, some people use it this way: 1, 2, 3, 4. What is the capital required? 3 plus 3 is 6, and 4 10, and plus 1, that is 11. So if you multiply 11 with 15, you may have something around, what is required? 11 into 15. 11 into 15. You need just $176. 176 USDT is the only thing required. 176. But I would not recommend that you go below this. This is the least capital that you can have, around 175 or 176 USDT if you have. This is the least. If someone says I have just $100, or if someone says I have just $50, or if someone says I have just $30, you can still trade, but don't reduce the times you have buying. Don't reduce these times that you have buying every time. What you can do, you can delete this fourth margin call. You can delete this from your strategy. Just use 3 margin calls. Or even if you have a lesser capital, you can delete this third margin call, and you just use the first 2 margin calls. But only use this way, either 2 plus 4 or 2 plus 3. This should be perfect. You can reduce your margin calls, but don't reduce the times you are buying. Try to use the double up strategy. Double up strategy. Suppose you have less capital and you still want to use the double up strategy. What you can do, limit your capital to trade in these 3 margin calls. Allocate your capital in these 3 margin calls. Forget about this one and just add up these 3. What it will say? 4 plus 2, that is 6, plus 8, that is 14, plus 1, that is first buy, and 15. And we know we require just 225 USDT. So this is a better option. If you have just $200 or $250 and you don't want to reduce the efficiency of the strategy, what you can use to reduce margin calls and use 3 margin calls and still use the double up strategy. That will allow you to trade using the best strategy, but with a lesser capital, around $200 or $250. This is another option, right? Don't do this like 1 and I will just buy every time one time. This will not help you. This will not help you to bring your average price closer to the current price and do the dollar cost averaging. It will not help you. It will increase your floating loss. Your floating loss will be going above. Above means more in minus. You have 0.5%. If you buy one time, it will go to around 2% or 3% floating loss. So don't use a weaker strategy. Instead, use a better strategy to trade, but you can reduce margin calls. So these are the different options that you can use on this side of the page. But you must understand what is this for, margin call drop. This is how you are giving the instructions that every time the market drops by this percentage, I want the robot to go and buy this times. Every time it drops this much, go and buy this times. It drops this much, go and buy this time. It drops this much, go and buy this time. So you are giving it instructions that the robot will wait for the market to drop on these percentages. So how you design this is very simple. Just look for the signal that you got. Suppose the signal says that you need to cover a margin call drop of 5%. Suppose the signal says that you need to cover margin call drop of 5%. What you can do, you can distribute your 5% in these 4 margin calls. Either you can do this one time, 1%, 1%, and again 2%. Though this will add up to 5%. You can use this one also. This is very simple. But instead of using this, I will give you a better option. If you are a smart trader, you will use a better option, because we don't know where the market is going. Is it going up or is it going up, down, right? Because suppose you start a trade here, and you got a signal that the market will give you take profit of 3%, and you can open margin call drop of 5. Suppose you got a signal and these two figures are mentioned there. So you are preparing for 3%, but you need to be prepared also for 5% margin call drop. So suppose you start from here. Listen this very carefully. And you are expecting that the market will drop to 5%. You are expecting, because you read the signal that the market will drop 5%, then it will go to 3%. So you are expecting this to happen. But instead, what happens? Instead of this, because nobody can predict the market, it can move on its own way. Instead, just try to understand another scene. This is the first scene that is mentioned in the signal, that when you start at this price, the market will drop to 5%, then it will go to 3%, right? This is clear scene number 1. But imagine scene number 2. Market drops by just 1%. Market drops by 1% and straight away goes to 3%. It will not drop below 1%, or maybe it drops by 0.5%, then goes straight up. Or maybe another scene you can imagine, it doesn't drops and goes straight up to 3%. Doesn't buys any margin call. So these are the 3 scenarios. Number 1, number 2, or number 3. All threes are possible. All these 3 are possible, and you cannot calculate which one is going to happen. But you need to be prepared for everything. So to prepare for the worst thing and the best thing, what you need to do, you need to be prepared for the worst one, the third one, that is not in favor of you. That shows that the market straight goes up. But we always know that the market, any market, any coin doesn't go straight up within this straight line. Within this straight line, there are very little ups and downs. There are very little ups and downs. If you go in the lower time frame of the candlestick chart, you will see that there are many green and red candle in an uptrend also. So what we can do, we can take advantage of this volatility of the market, and we can give little percentage in the first or the first 2 or the first 3, and reserve the remaining percentage market call drop in the last one. So that suppose market starts from here, and if I put a 0.2% here, it will come down and it can go up. Or if I write a 0.5% here, it can reach here and go up. Or if I write a 1% here, it can come down to 1% and go up. Or if I write a 3% here, it can come here and go up. So I am preparing it for all the different scenarios. But I don't want to miss any chance. I want the robot to buy more for me, because suppose the first buy is $15 and I have planned a strategy of $500. I have planned a strategy for $500 using the double up strategy. And I have given 2, 4, 8, 16 as a multiple buy, and still I don't know whether it will use only $50 or it may use $50 or the full $500. So for preparing for this, what I need to do, put a little percentage in the first few margin calls and rest of it in here. So the best thing you can do, put a 0.5% or maybe 0.2%. It is up to you. Put a little, very little percentage drop in the first call, because you want it to buy at least 2 times. What is 2 times? That is $30. So suppose the market goes up from here, coming down 0.5% and goes up, you still have 15 plus 30. That is the first buy and the first margin call. So you are trading on $45, not on only $15. So that will give you a 3% profit of $45, not on $15. Okay. And in the same way, suppose you put a 0.5 here, then you can put a 1% here. The total should be 5%, suppose. And what you can do, you can put a 1.5% here. So how much percentage is remaining? We have already covered 3%. 1.5 and 1, 2.5, and 0.5 is 3%. So remaining 2% you can drop here. So this way you are covering 5% total margin call drop, and you are using this strategy, and you are giving the best option. Suppose it's first buy in $15, you are giving it a better chance to buy 2 times once the market drops by a little 0.5%, and it is very it is very easy for the market to drop by 0.5%. If I put a 2% here, it is little difficult. So it can go from here to here and it give me profit from my $45, or it can go till 1%. So this way I have already bought 6 plus 1, 7 times. So it will give me a profit of my $105 into 3%. I hope you understood this. So it is advisable that you use this in this manner. I will do it for you. 0.5, put a 1 here, or maybe you can reduce this even little. 0.2 also you can use, and put a 0.8 here. So this way you are already cover 1% drop, and within 1% you have bought 7 times. Remember, you have bought 7 times, 4 times here, 2 times here, and 1 time before. So you can use this one also. So till now, how much have you covered? This is 1%, 0.8 and 0.2, but you have total of 5%. So divide the remaining 4% into these two, or you can use 1.5 here and 2.5 here. It is up to you, right? So you are just preparing for any scenario that may happen, because you never know how much it is going to go up and down. So these are the different options that you can use. You can, let me complete this and write 1.5 here and 2.5 here. So this is the way you can, this is the best way you can cover a 5% market drop, because you are covering just 1% drop here, and still you are buying 7 times till here. And if the market drops by another 1.5%, or maybe you can put 1% also here, 1%, and the remaining 3% you can drop here. So either way, whichever is your planning, you must consider all the possibilities in the market. Don't always think positive. Think about different possibilities that can happen. So this way you can design the margin configuration, and once you have designed, you can confirm this and put the strategy mode here, strategy mode to 1 shot. Don't forget this. Click on this cycle. Just click and change it to 1 shot, because you don't want to buy again at a higher price. So this is for 1 shot. And this way you can start the trade. So suppose I save this here and confirm. It is not allowing me to confirm because I need to reduce, right? What I didn't do is to reduce this percentage. Why I need to do? Because if I go here, margin configuration, you see, I have given it instruction to buy even if the market drops by 0.2%. So the callback cannot be more than the first margin call drop. It should be less than this 0.2%. So it should be around 0.1%, right? So if I do this and save it, it will save. Now I come back to the main page. Now what you need to do, look for the preset price. If any price is given, mentioned it here as I explained earlier, and click on start. Click on the start button. It will start. If there is a preset price, it will wait for the preset price. If it is not without a preset price, it will buy at the current price. So this is how you trade and set all the parameters. I hope you have gained a lot of understanding today. And I have one more important lesson to give to you before I go further. I will just take a few 5 or 10 minutes more. So I have one more important lesson to explain to you. But before that, let me know in the chat option, is everything clear? Each and everything you have clear understanding? And now you know how to set a trade independently without asking anyone to help you. You don't need anyone's help. You can do it yourself, because we need to become independent traders. We don't want to depend on anyone. We don't need to call our seniors to help us to set up the trade every time you receive a signal. You need to be independent, right? So I think all of us are clear. Let us move to another lesson. That is another important thing that you must understand, and that relates to your capital management. Right? You must understand this last lesson before you go, because as I told you before, you need to be prepared for each and every scenarios that may happen in the market. You need to be prepared, and you need to imagine, and you need to be prepared before anything may happen, because we all know that market is not our friend. It can go in favor of us and it can go against us also, right? So we need to be prepared for each and every positive or negative thing that may happen. Suppose you are trading and you open this trade and you have very beautifully designed these trade strategies as I just explained. But what if Mr. Happy is saying I missed some setting up Zoom? So if you missed some part, you can go to the YouTube channel of our coach Julius, and he has this YouTube channel by the name of Crypto Ambassadors. You can search on Crypto Ambassadors in YouTube. You will find this video on the channel in the live option, right? Go to the live option, and this is being streamed live. So later you can watch it again, and you should watch it multiple times unless you want to make any mistake while setting up the trade setting, right? Okay, so let us move forward because we have less time, but I don't want to skip this very important part that is called the capital management. So let me share. I don't see the whiteboard option here, so let us take the screen only. let us take the screen, and we can use this, or maybe you can go to Royal Q, right? So we all know that market is not our friend, and it can go either in favor of us as we are planning, and also it can go against us also. So when we planned for this trade, we assumed that the market cannot go below 5%, and we opened 4 margin calls as we saw here, and we are preparing for this 5% drop, and then it will go to our take profit, right? We are assuming this, and we are very expertly designed our strategy for each and every option that may happen. But we forgot about another option, another thing that can happen, that we must understand and be prepared for. Another thing which may happen, even if you have opened 4 margin calls and the market has dropped by 5%, instead of now going up, it goes below 5%, maybe to around 7%, or maybe to 10%. So if the market drops and go below our margin call drop limit, what we need to do in that scenario? You must be prepared for it. For this scenario, first thing you need to understand is, that is most important thing, that is called capital management, or you can also call it risk management. Capital and risk management. That is very important in trading. Even if you don't have any technical knowledge, even if your strategy is not very good, still you must be very smart in using this capital management. This is the most important thing that will prevent you from losing all your capital and going into losses. If you don't want to go into big floating loss, and you want to prepare for each and every aspect of the market, you need to understand and learn how to manage your capital and how to manage your risk, right? So for that, you need to first know how to manage your capital. So what is capital? Capital is not a trading capital. One thing is capital. You can write it down. And another thing is our trading capital. These are two different things. But most of us know that these are all the same. But these are not same. One thing is your capital, and another thing is your trading capital. There is a little difference between the two. Suppose you have $1,000 as a capital. This is your capital. Suppose you have a capital of $1,000, and that is inside your spot wallet. Sorry. Inside your spot wallet. This is your spot wallet in your exchanger. And you have $1,000 and you want to trade on this capital. You should always break it down into equal parts. 2 equal parts. One is your trading capital. One part is your trading capital, and another part is your recovery fund. We call it recovery. You can write it down. Recovering capital, right? So this should be equally divided. 50% you need to put in your trading capital, and 50% you need to reserve it as a recovery fund. Why we need this recovery fund? That is very important. You need to understand, because most of us don't understand the importance of this recovery fund, and we sometimes out of greed we put all our capital into this trading capital account, and we use all the capital for our trading. Suppose you have $1,000 and you want to trade in double up strategy, and you know that you need $500 for one coin, and you receive one signal and you put all the $500 here. Then you receive another signal, and many traders, many Royal Q users are saying that this is very good coin, this is very good coin, this is going to be giving us 10% profit. Then what you do, you get excited and put the remaining 500 on another coin. This is coin 1, this is coin 2. And suppose this thing happened that both these coins go into floating loss. Then how can you manage to come out of this floating loss? And suppose you are into floating loss in both the coins. This is giving you 10% floating loss. This is giving you 20% floating loss. And both your trades are stuck. You are waiting for the market. And suppose you receive a third signal, and that is giving you 15% profit. And that is very good trade. All the people are buying, but you are waiting. You don't have any capital, and you cannot come out of this floating loss. Then you will be helpless. So instead of this thing happening, what you can do, instead of this thing to happen, what you can do is to allocate your capital into two equal parts. 50% you put in your trading capital account, and 50% you put in your recovery fund. Recovery, 50% here. So why it is important? Because suppose you are trading with 50% of your capital. I just took an example of $1,000. Maybe some of you are trading in $5,000. Some of you are trading in $10,000, or maybe even more. So whatever you have, total capital, the total capital that you have, only use, mark my words and write it down in your diary. This is very important to remember. Only use not more than 50% of all your trading, all your total capital. This should be only used for trading, not more than 50%, because you never know which way the market may go. It may go up or it may go down. And you don't want to be stuck in any trade when you see a lot of floating loss and you cannot manage to come out of it. So if you have at least 50% of your total capital in your recovery fund, what you can do, you can use this in the emergency situation. This is like an insurance. You know insurance? Many of you may have bought some insurance policy. Why is insurance important? Because you never know when you may fall sick, or maybe you have some accident or some emergency in your family. So if you have some insurance with you, that is a recovery fund, that if suddenly you require any big amount to come out of any emergency, you must have some reserve funds, right? So that is your insurance for coming out of this bad situation, that emergency or your floating loss. So suppose you are trading on any coin, you can use this fund to come out of this floating loss. Now, how to come out of this floating loss and how to recover from a falling market? What you can do, suppose you have been trading on this very coin and you have bought all the margin calls, the 4 margin calls the robot has already purchased, and it has covered 5% market drop, and it has utilized your 500 USDT here, right? This is your USDT. This is your margin call draw. You have already done this. Now the market is below, suppose 15% down. It has gone 10% more deep than what you expected. Now what you have a recovery fund or 500 more. So what you can do in this situation, instead of waiting for the market to come up, you can open and more additional calls. You can open 5, 6, 7, or even up to 999 calls. That is a maximum limit. Why you should do this? There are two benefits. Two benefits that are very important. First benefit, you can come out of floating loss by using dollar cost averaging. Right? If I open more margin calls, The first benefit is you can come out of floating loss, because every time I'm buying more at a lower price, I'm helping my average price to come closer to the current price. So this way I'm reducing my floating loss, coming out of the floating loss and recovering my trade. Second benefit, that is another important thing, that you are able to earn even more. You are able to earn more because you are buying the dip. Buy the dip. Because till now, you have just bought at a price 5% below. But now you have opportunity that you can buy even if the market drops by 15%, even if the market drops by 20%. So this way you are buying more when the price is even cheaper. So if you buy a coin that is at 20% discount, and when you sell it at your 3% profit, you will make a bigger profit. You will make a bigger profit because you have now more quantity that you have bought at a very cheap price, and you are selling it at the same take profit, and already you have done the dollar cost averaging, and your average price is coming closer and closer to the current price. So that will help you to come out of floating loss very quickly. So this is called managing your capital and coming out of the risk, and keeping some insurance for your trading policy, right? So for that, first of all, you need to put at least 50% of your capital inside your reserve fund. Don't use it for any trade. Just keep it aside. If you are afraid that robot will buy without your permission, you can one thing more you can do. Instead of putting all your fund in the spot wallet, put 50% here and remaining 50% put in your funding wallet. 50% here. So that will not be used in anything. That will be just reserved. And once you want to use this, you see this opportunity that you can, this is the time I need to use this 50%. So you can transfer it to your spot wallet anytime, and now you can open more margin calls. So what is the first thing you need to do? Come to this page and now open these margin calls, increase these margin calls, which I have put 4 before. Now maybe I can add 7 margin calls, or maybe I can add 10 margin calls, or it is up to you how much capital do you have. You can even put it to 999 times. So this is a maximum limit, because if I try to write 1000 here, it is not going above 100, right? So that means the maximum limit of margin calls is 999. But we know already that every time we are buying any margin call, we need some amount of capital. So what you can do, according to your capital, suppose I have opened 10 margin calls. So now if I go to margin configuration, these are the first 4 margin calls which I have already bought previously. This is our bought section, and now we have 6 more margin calls that have been added below our 4 margin calls, from call 5 to call 10. So these are the additional calls that you can manage. And the first thing you can do, I will give you a smart tip that you must understand. Once you want to open this 5th margin call, because you are already bought 4 margin calls. This has been bought, right? Now this is a new section. So first thing you need to do, suppose you have bought till here and you see a floating loss in the previous page. Let me take you there. Suppose you see, if you come back to the previous page and you see that here it is showing, suppose 12% floating loss, minus 12%, right? So what you need to do, come to that page, come to trade settings, and open more margin calls by editing this to 10. You can edit 2 more, 5 more, that depends on your capital. I'm just taking an example, and now I come to this page and I have seen, I can see that this is what I have bought and this is what we can buy more, right? So I have already seen that the market is giving me minus 12%. What you can do, you can write any number below 12% here. Don't write above 12%. You can write 2% or maybe 5% or maybe 10% also. But whatever you write here, you want the robot to buy immediately. If you are using it below 12%, if the floating loss is 12%. So try to, you can write anything here. Maybe you write 2% here or maybe 3%, right? So it will not buy after it reaches 3%. It will buy, it will go and see. Remember what I told you earlier? It will go and see which is the lower price, because it is our friend, right? Our best friend. So it will see, is the 3% drop price lower or the current price it is lower. So it will see that current price is lower. It is below 3%. So it will go and select this one, right? So even if you write 5 here or 1 here or 10 here, it will just see which is the lowest price. So don't write about 12% because it will select the lowest price. So 3% suppose I took here, and what you need to do, first you need to calculate how many times you can buy more. How many times you can buy more in these 6 margin calls. We have 6 more here, right? 1, 2, 3, 4, 5, and 6. These are 6 margin calls. So we cannot now use the double up strategy. We cannot use, because this will require a lot of capital, 32 times, 64 times, 128 times. So maybe you don't have, because all we have is a reserve fund of 500 USDT. So what we need to do, look for what it bought before. Look for what it bought before, and according to your capital which you have now, either way you can divide it by the 6 margin calls and buy equally, or you can be a smart trader and buy in an increasing order, right? So you can go and calculate how many times can you buy, because your first buy is what? Your first buy is 15. So now you can calculate in this way. Suppose I have a recovery fund of $500 and I cannot go below 15 because that is the minimum first buy I can manage. So actually I will buy 33 times. I will buy 33 times. Okay. You got it? You have this recovery fund and this is your first buy. So total times that you can buy is 33 times. So what options do you have? What different options can you have? Either you can open 33 margin calls. One option is either you can open below this 4th, which have already been bought. You can open 33 margin calls below. 33 margin calls, and each time you can buy one time. This will also help you buy more every time the market drops. Or you can use a better option. Select less margin calls and buy more every time you want to buy more. So what you can do, you can calculate your strategy on your calculator, because highest we can buy 33 times and we only have $500 capital, right? So suppose I buy 2 times and then 3, then 4, then 5. So I can use the +1 strategy, and keep your eye here. This should not be more than 33, right? Keep looking here. So you can design your strategy 5 plus 6, sorry, 6, then 7, then 8. This is more, right? This is cross the 33. So what you can do? What you can do? Delete the last one. Now we have bought 27 times, but we can buy 33 times. So what we can do? 27 minus 33. So last call you can buy 6 times. So this way you can design how many calls? 2 plus 3 plus 4 plus 5 plus 6 plus 7 plus 6. So this is a total of 633 times we have. And how many margin calls do I need to open? 1, 2, 3, 4, 5, 6, 7. So I can open, if I have $500 and I want to open maximum margin calls, what I can do? I can use this +1 strategy, and I will keep on increasing one more in these 7 margin calls. So I can open 7 margin calls and I can use this one. Or it is up to you. You can also do this in a double up strategy, 2 plus 4, but that will allow you to open less margin calls. So you need to buy more because you never know how much more the market may drop. So it is up to you. You can use this one also, but this will allow you to just buy 5 margin calls more, 2 plus 4 plus 8 plus 16, and one more you can open with 3 margin calls. Instead of this, it is better that you buy in an increasing order. You can also use this one time, then 1.5 times, then again 2 times, then 2.5 times, then 3 times. So this way you have more margin calls, 3.5 times, because you are buying more every time. But this may look a weaker, but still you are buying in a down market. So you are slowly adding up your asset, and you are buying more when the market is dropping. This way you can open multiple margin calls, 5, then 5.5, increase 0.5 every time, right? So this will be more. So what you can do, in the last call, you can change it to 6 times. So these are how many calls? How many calls are there? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So these are the 10 margin calls that I just opened. And total times I am buying is 33, because I know 33 multiplied by 15 is 495, and I only have $500. So I can plan my recovery from here. So from 7 margin calls to 10 margin calls you can open. In case the market has gone below this 5% market drop, below the 4th call, and it is now in floating loss, and you are waiting for the market to recover, instead of just putting your hands on hand and waiting for the market, you have this opportunity that you can cover more drop in the market. Maybe you can cover up to 20% or maybe 30% drop in the market, that you need to design here in the left side, right? So below this you can plan, if you are open 7 more margin calls. So in 7 more margin calls you can design in this way. Suppose 3% here, then suppose 5% drop here, then you can put a 7% drop here. Then if the still market is going down, you can increase it to 8, or maybe then 9 or 10. So this way you can increase, you can buy more when the market is dropping. But this should be your analysis, that how much market can the market, how much more the market can drop, how much market drop do you expect now. So for that you need some technical knowledge. Don't go just by guessing. Go to TradingView app, use your support and resistance, and see which is the next support line and how much market drop you can cover. you need to cover. So that is your calculation and technical part. And this way you can come out of floating loss by using this strategy. And this is why you need to understand why capital management and risk management is most important, because you don't want your coins to remain in floating loss for another 2 or 4 months and you don't earn a profit. So instead of opening more and more coins with all your capital, you need to control your greed. You need to control your greed, and you need to be prepared to at least trade better on the available coins, on less coins, than to trade poor on more coins. So instead of trading on more coins and with a poor strategy, it is always better to trade on less coins but with a stronger strategy. That will give you a better profit. So this was today's lesson, and my time is over now, and I finished the lessons also. I hope you liked this session and you have got a bit of understanding. If you understood and you liked what you learned, you can share in your chat option, or if you want to ask anything, you can ask also before we close. And thank you so much for being kind listeners and responding to me every time I ask something. Someone is saying I'm not seeing the screen. Now the screen sharing is gone. I hope you could see before when I was sharing. Okay. Was everyone seeing the screen, or was it not visible? Was my phone screen visible or no? Just a few minutes before. I hope you could see my screen before. Not now, but before. Yes, you could see. Okay. So thank you so much, all of you. And some people are asking my number, so you can contact me in my on the crypto ambassador groups. I have already joined many groups from Leader Julius. You can look for me, and my username is Coach MB. I am in the 300 300 group also. I am into crypto ambassador group also, and some other groups. So I don't usually share my number, but if you still need any help, you can contact me and you can find me on WhatsApp, or you can ask Leader Julius. That is he can help you. Thank you so much, all of you. And today is being a lovely day with all you lovely people. And let us hope to trade in a better way from today and become independent traders and smart traders, not greedy traders. We need to be very patient traders. And let us meet next time. Till we meet again. Thank you so much and have a good day. Bye-bye.